Good morning, everyone. This is a impromptu live to walk you through exactly how high probability trading is the love of my life. Absolutely the love of my life. I'm not going to be here a long time, but for like the next 30 minutes, I just want to show how you too can potentially make weekly income by using high probability trades. And again, this is based on live numbers, real live numbers, and we're just going to get into it. Let me show you my screen and my setup. Well, first, you know what? Let me show you exactly why I thought today would be a great day to come in live and show you what's going on. So let's just go to what the market is doing today. But I'm going to show you truly how you could have made $1,000 in less than 4 days. And it's not anything that is complicated. And we're going to show you exactly how you can simplify the process. Again, only using high probability trades. So, what I want to show you is that today, this is today's information. Let me see if it shows the date. Well, it's markets today. I don't see the actual date on here, but like this was 7 minutes ago, this update. So, anyway, the first thing I want you to pay attention to are the market leaders for today. And these are the same companies I highlighted in another video a few days ago. These are the Magnificent Seven Plus, right? So you got Tesla running the market today. You got NVIDIA, you got Google, you got Class C Google, you have Microsoft. And we'll talk more about the difference between Class A, Class B, Class C, all of that during the course. You have Meta, you have Broadcom, you have Apple, you have AMD, and you have Amazon. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 companies that are the market leaders for today. And it's only 10. This was at 10:56, right? Let me see if it's updated any. I'm not signed in. Oh, you know what? This is Central Time. Sorry. So it's 11:01 Eastern Standard Time, the latest update. And 11:56 for the market. Excuse me, 10:56 Eastern Standard for the market leaders. So again, when you see things like that, it shouldn't surprise you. It shouldn't surprise you that the Magnificent Seven, which is highly and most exclusively tech influenced and the tech bros, this should not surprise you. But that means certain things are happening. And some of those things are some of my favorite setups. And we're going to look at some of those charts right now. And I'm going to take you through exactly, oh goodness, how beautiful some of these setups are. So let's go to Google, because Google had a 5% mark change and it is only 11:12 a.m., right? And this was at 10:56. That's a huge range for this early, but that means there was overnight activity, which, and we'll go to the full chart. So what the site I'm looking at now is, and I mentioned this earlier, it's Bar Chart. It's one of my favorite setup sites. So when I'm charting on Sundays, when I'm in the market on Mondays, I always reference Bar Chart first for research, for all of my research. And then I use other resources and toolkits. But we're going to focus on um, Bar Chart right now. So let's go to the candlestick because it's just easier to see. Red indicates that the stock closed lower than when it opened, so they would consider that a down day. A green candle means that the stock opened lower and closed higher, right? And so right now we're looking at Google, also known as Alphabet. This is their Class A um, shares of stock. They have different classes. Again, we're not going to get in that today. But what I want you to see is that when I say you could have made $1,000 in 4 days, I really want y'all to believe that. I really want y'all to believe that, and that it's not uncommon, and that when you take high probability trades, listen, it's more the odds are more stacked in your favor than not. So one of the setups, so I just want y'all to see right here. This is from Friday's candle to today's candle. And one of my favorite high probability trading strategies, the umbrella name is gaps, right? But there are so many different types of gaps that I only focus on the high probability gap trading. And that is how I I have been blessed to generate income weekly, like a whole salary, right? By using this is just one of the strategies that I use. There are three others that are high probability trading strategies that I also use, and I put them together to make sure that the trade is positioned to go the way that I want it to. So let me just get into this gap right here. Can y'all see that right there? And I can't see if you're making any comments right now. I'm not even on the camera right now because I have um, Trading View open. I have bar chart open. I have my actual account open with Thinkorswim, and I just don't want this live to slow down or glitch or anything like that. So this is well, there's a couple of gaps that I'm going to show you. Let's start here. Well, no, look, because that's, yeah, let's start here. So this is a gap right here. I hope you can see that. Let me increase right here. So these two candles, this green candle here, gapped up overnight and formed this candle here. But this is still a gap, right? There was a gap here, but that's a seller's gap. And I'll talk more about that during our course. But we're going to pay attention to the gap ups like this one here as well. Right? So if you would have paid attention to this gap right here, which is one of my favorite gaps based on the candle formation, the supply and resistance, or support and resistance, I should say, and what happened once it entered and filled wick to wick this gap, you could have generated, and it depends upon your investment. And I'm going to do, let's do different types of investment. So if you would have gotten in, let's just say $280, right? $280 per share, and you don't have to buy full shares. So let me see if I could pull up my calculator. So we said $280. You could have gotten out. You could have gotten out with a $11 profit if you wanted to, but there were ways that if you knew you could have stayed in, then you could have literally rode this all the way to today, where it's now at $314, right? So I said $280 for the sake of mathematics, right? Let me try to pull up my calculator. Please ignore my let me do it this way. Calculator. Okay, let me share the calculator. Remember, $280, and we're going to do 300 and 314 as the selling places, the selling angles, right? So let me share the calculator right now. I'm going to stop sharing bar chart for a second, and then I'm going to pull up the calculator, just a regular old regular Google calculator. And so remember, I said you can even buy fractional shares. So what I'm going to do two different examples. I'm going to do if you would have invested $1,000 when it entered that gap or when it filled that gap, I'm going to show you how many shares you would have had, right? So can you see? Let me just make sure y'all see my calculator. Yes, perfect. Okay, so here's the calculator. Let's just say, you know what? Let's start big, Willie. Let's start that you had $8,000, right? That you were willing to use to take this trade. You're going to divide the 8,000 by $280. That means you had 28.57 shares when you got into this gap, right? So you now bought 28.57 shares of Google. If you would have sold it at the 300, let's say 314, and then we're going to do, so that's 28.57. Hopefully I'll remember that. But let's say you sold it today for 314. Let's do 313. Wait, what did it open at? Because I want to be realistic with this. Like you may have woke up today and was like, oh wow, it's at 310, 311. Let's do 311. Because you may not have wanted to wait that long. You would have made $885 in what is it, 4 days? What was that? 4 days. Let me look at the candles again. Yeah. 1, 2, 3. Today is the fourth day. You got in on the 18th. You got out on the 24th. So that's 4 full days, right? That's $880. I was using originally a $10,000 investment. So 10,000 divided by, and we're going to look at what you would have gotten if you would have had 2,000. We're going to look at that as well. So 10,000 divided by $280. That's 35.71 shares. If I would have then sold that for $311, that 10,000 would have turned into 11,000, 11,107. That's a $1,107 profit in 4 days. Now, I talked yesterday in yesterday's video or the day before about swing trading. Not all swing trades are going to deliver in 4 days, but there are certain companies that can do it and they tend to do it time and time again, and many of those are the Magnificent Seven. And so you may be saying, oh my gosh, 10,000, that's a lot of money. um I don't really have 10,000 to, just deploy to one stock and wait for it to produce. Guess what? Let's just say you had 2,000. And what did I say? Divided by $280, you had 7.14 shares of Google. And we're going to look at another example, AMD, which is less expensive than Google, right? And I don't even like to say expensive. The price per share is less than Google. So you have 7.14 shares, then you decided to get out at 311. You still made $221. That $2,000 would now be worth in 4 days $221. That's groceries. That's a electric bill. That is um, a piece of your phone bill. That is a bill, right? That is a plane ticket. And this is the type of thought process I want us to have. And this is why I am doing these courses, me along with Andrea. If you are unaware of the courses, go ahead, look at yesterday's video, look at the day before video. Also in the description and also in the chat, we are doing a free webinar tonight. Well, I'm doing a free webinar tonight at 9 p.m. Eastern Standard Time, just like we did on Saturday. And then again tomorrow at noon. You can click the link, register for either or, and it'll give you the options. Look for additional times, I think, at the bottom. So we're going to do these 2 sessions, these last 2 days, to walk you exactly through the program and why we are qualified, overqualified to teach this program. So let's also look at another stop. I'm going to stop sharing this. I'm going to share. Let's go ahead and share bar chart again. And let's go to another stock that's moving. And then, okay, so this is one gap, but then also this was another gap, right? Another gap that once it entered and filled, you could have rolled that from 270 something to 290 something. So we're looking at between a $15 and $20 profit per share in another 4 days, 3 days, actually, 3 days, because you got in here, you got out here. Some people may have got in here. That's okay. That's okay, because that would have just taken a few more days for you, or you may have even gotten in here when it, started to enter. But if you waited for it to fill, then it would have been less days. And I always say, and we always emphasize, let the stock come to you. If you miss the move, there'll be another one, i.e., this one. So don't have the FOMO. Don't think you have to take a trade. And some of the things that I'm saying you may not, understand because of the terminology. This is a beginner friendly course. We're sending out an email today to all our registrants on how to start prepping for week 1. Week 1 is Sunday coming up, the 30th. We're going to go through the resources, the toolkits, and all of that. So if you miss it, that's okay. We're recording it. You'll have the replay. But again, don't have the fear and anxiety of missing a move, because there'll always be another one. And I can show you another one on the Google chart as well. Let's find another buyer's gap. So this one, you probably would have got stop lossed out. And that's why we say only focus on high probability trades and be sure to preserve your capital, because that's okay. If you would have got stop lossed out for 10% of what you invested, we're talking, a couple dollars, 10 to 20%, then when the move came back again, you would have been okay. But I want to just show you, more often than not, high probability trading, once this gap filled, look what happened. It, you know, went up again, right? And even if you waited for it to come back down and to rise again, that's fine. That was, what day is this? That's August 2nd. So if you would have waited until October 30th, you would have generated, you would have had a higher payout, but you could have still won. And it's also about not having one share. Excuse me. Let me go ahead to AMD. Sorry, y'all. I want to show you AMD because I'm literally making these moves as I'm telling you about them, right? And so let's go to the full chart of AMD. AMD is another one that is a high probability trading ticker. And so let me do 1 year. Just see, I'm not logged in. So, but you can see yesterday, Friday, and then today, you could have got in on Friday at 196. You could have got out today at 212, depending on how many shares you had deployed. That could have been enough for you. And that's why compounding, the more shares you have, the easier it is to hit your target. With one share, listen, you may be happy with walking away with $12, right? But if you had 10 shares, right, that's $120. If you had 20 shares, that's $240, right? So again, compounding, we're going to teach all of this in a minute, but this is what I mean. AMD understands the assignment as well. What is this right here? A gap. And it's a certain type of gap. And it's a gap that I would have entered this trade 10 times, 10 times over. And look what happened. It enters into the gap. There were so many buyers there that it just pushed this stock all the way up. So if you would have gotten in, let's just say, I mean, most people, it'll range. So anywhere from 150 to like 152, you probably would have gotten in because you want to make sure it's in the gap, right? Because you see, it tried to enter the gap on this candle right here, but got rejected. Here, you want to make sure it's in the gap. And we'll talk more about exactly numbers and how you set those targets and how to get notifications and all of that. But if you would have waited and gotten in, let's say at 150, you could have rolled this up to, I'm just going to say 180 for sake of math, right? And then let me just show you. And again, I'm going to say all gaps are not created equal. Let's go to the calculator. Let's share the calculator. And feel free to ask any questions if you have them. Be respectful. I do not get, I don't get shaken easily. So don't waste your time. Please don't. Okay, so I said 150 and 180, right? Okay, so let's just say big baller shot call. I got $10,000 to deploy against AMD. It's a Magnificent Seven company. I got way more than that in the bank, right? Making no money. But I said, you know what? I'm going to take 10,000 and I'm not going to say take all your last, no, please don't do that. But I had 10,000 to invest and trade with. And we're only taking high probability trades with solid companies that tend to react to these high probability trading patterns. So we're not just finding any ticker within the exchanges and trading them. No, we stick to companies that tend to follow follow, they do what they're supposed to do. They follow the patterns, and more often than not, between 70 and 85% of the time, you will be right. So I have $10,000, right? And I said, what was it? 250 divided by 250. I'm going to have 40 shares. So that's a beautiful even number. 40 shares. Okay. 40 shares then by 2.8 times 280. In how many days, y'all? How many days is that? This is what I'm talking about. So let me see how many days that would have been. I'm gonna bring the chart back up. It got to 280 literally in 1, 2, 3, 4, 5 days. Did it? Yep, 5 days. You would have made $1,120 with a $10,000 investment. But cut that in half. If you would have had $5,000, you'd have made $600, right? $610 in 5 days. That's a car note. That's a couple nights at a hotel. Like, this is how we get the market to pay for things that we want and or need. And again, I'm going to take you through a couple more examples because I believe seeing is believing, and we're going to pay attention to the stocks that I first showed you at the beginning of this video that are moving the market, the Magnificent Seven. But then they have companion, what we like to call sister stocks or cousin stocks that follow their same flow. So let me go ahead and get back to bar chart and give you some more examples. If you are in here and watching, I just ask that you hit the like button. If you are not a subscriber, become part of the Gem Nation. I am Kim, aka Kim with the Gems, and I talk money on this channel. I talk money, I talk wellness, and I talk travel. And all of my videos are specifically designed for the culture, for Black Americans who have been left behind in certain conversations. Well, I'm here to bring these conversations to the forefront. So let me go ahead and share bar chart again. And here we go. So let me, oh, I have to add it to the screen. Give me 1 second. There we go. So here's bar chart. Let's go to another one of the companies that were on the Magnificent Seven, right? Now, I don't usually, mess with certain companies. Um, I'm just trying to see some really obvious. Yeah, here's another one. Here's another, uh, filled the gap at 109, ran up to 123. Like, there's certain trading strategies. Now, again, this isn't the only. So when I find the gap, there's other strategies that I also use to make sure that the thesis that I think I see is actually accurate. So there's other things. You want to know support and resistance. There's other ways that I verify that I'm going to take this trade before just jumping into the trade. There's also volume. There's other things that you really need to understand. And if you're interested in joining the high probability trading only masterclass, which starts on Sunday coming up with the foundation, the orientation, the resources and toolkit review, which will also be available for replay, go ahead and use the link in the chat or the description or what's going across the screen. So again, just another setup with AMD that I wanted to show you. This gap right here, you get in any one of these candles and you ride it till, you're ready to get out. And we talk about where your ceiling should be, right? So where you should exit the trade. And if you decide to stay in the trade, then you're just, it's a risk, right? But if you are looking to be as profitable as possible, we don't it's called hopium, right? We don't hope, and pray that it's going to keep rising. No, there are certain patterns that show us where to get in and where to get out. And if you decide not to get out when that pattern tells you to get out, then you are living in a dream, a dream filled world based on hopium. And that's not what we do. So let me see. Do I even want to talk about, let's see. This company made me a lot of money, so you know what? I'm going to talk about it. And it's up to you ethically as a person if you choose to um, engage in this company or not. And the company is Tesla. And I'm just going to take uh because I haven't traded this in a while. And when I say a while, since this man, showed who he really was. But let's see if I could go back to when, yeah, let's go ahead and go here. What year? As long as it wasn't 2025, then we could talk about it. Let's see what year this is. Child, what the heck is going on? Well, let me just hit the candle. I was trying to get to the bottom of the screen, but let's get back to, okay. Mm-mm. Where is it? Did I lose it? You know what? Okay, this is back in 2022 when Tesla was good to me, child. Yes, 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 yes. Okay, so let's look at this date right here. This was January 25th, 2023. There's a gap. And because of the next candle formation, well, there's certain things that make me know this is a decent gap, and we'll go over those in the course. So then on the 24th, right? So this is, what is this? Well, this is the next day. Oh, here it is, the 26th. This is the 26th, 2023. Let me try to make these candles more visible. Sorry, there we go. So now you can see the gap, really, right? You can see the gap. The gap is clear as day. And this is when I don't trade Tesla now. So just know I'm only going on my trades through 2020, let's say October 2024, or probably a little bit before that when he started really showing his side. But again, this is the gap that was filled. You set your alerts for when, you know, it's a good time to enter, and you set your alerts for a good time to exit. Now, based on this chart, I would have gotten in somewhere over here between this red candle, which took place on August 26th of 2023, or this green candle, August 27th, 2023. And at the time, the stock ranged from $152 to $160. So you could have got in somewhere with this candle. So let's just say 150 or below it. So let's just say 100 and I don't know, 100 and let's just say 140. No, what is this? 100, excuse me. Yeah, about 154. Let's just say you got in at 154. I just want to show you that from $154, the first place that I could see someone saying, okay, I'm going to get out is 187, right? Maybe 184, but that's still $30 profit per share. So let's do the math on this again. But again, you could have, some people, and rightfully so, this may have been their exit, 203, around 203. Let's just say 200. So you could have gotten in at 154, rode this, I'm just going to say to 200. Let's see how much profit you could have gotten with those same numbers that I just used. And again, this was a stock that used to follow really good patterns. I wouldn't encourage Tesla right now because of the political stuff that goes around it, even though I believe in technical analysis trumping literally um, the news. I still think that it's just too risky, right? Here's another one, another beautiful setup. And this was back in, let's see, it started on, this was in 2021, October 2021. And if you would have set your alerts and got in December 2021, you could have gotten in. This was when the price was a little elevated compared to the last example, 299. Let's just say you got in 300, right? You could have rolled that child to 370. Oh my gosh. And I probably took that trade. I probably, because I trade a lot during fourth quarter because there's just certain patterns and predictability in addition to the gap trading. But yeah, from 300 to $370. And that is all based on this gap formation right here. And there's multiple things that are within this gap that would have let me know, okay, this is a high probability, but let me go ahead and check. Um, let me go ahead and check other resources, right? Or other strategies to make sure I'm right. to get the confluence that I needed. But okay, so we're going to go back to what was it, 250 to 300. Let me show the calculator for that. Okay, calculator. Here we go. So, am I sharing? Yeah. Okay, great. Okay, so 250 to 300. So let's take $1,000, right? If you had $1,000 deployed, you would have had 4 shares, right? Times that 4 shares by getting out at $300, you would have made $200 in a couple days. You made $200 in a couple days just with $1,000 investment. And so when people say, "Oh, I think you need a lot of money to trade." No, you start building, right? You build with what you have. One of the gentlemen who just I think he's registered now. I know I got an email from him. He asked in one of the live sessions, is 500 to 1,000 a good start? Yeah, as long as making $200 off of that $1,000 is okay with you, then yes, absolutely. And if it was 500, you would have made $100, right? So let's just do bigger numbers. Say you have, you know, a lot of people have money just sitting in their bank account and not making money for them, right? We're talking 20% returns on your income in a matter of a few days if you know what you're doing. The only reason I'm not super wealthy, I'm gonna tell you right now, is because I need to take my own advice and not be scared to deploy a whole lot of money. And when I say a whole lot of money, $100,000 on one trade. If I had the gumption to do that, I would be sitting at the table. Well, I don't want to sit at the table with these people, but you know what I'm saying. I, there would be a whole lot more zeros in my bank account, and it's not. But let's just say you have $10,000, right? And you take that trade, you get in at 250, you have 40 shares, you get out at 300, you made $2,000 on a $10,000 investment in a few days. For some people, that's 3 months worth of rent. For some people, that's a year's worth of um phone bill, right? For some people, it's a whole vacation, a solo trip, a scouting trip to another country. Like, there are so many reasons for us to be in this market making smart trades, not these high risk option trades and you don't know what you're doing type of trades. This is literally having a brokerage account, buying shares at a low price, getting out at a high price or a higher price, right? Making profit. And so I'm going to show a couple more examples just because, like I said, seeing is believing. I know for me it is. And I do believe that many more of us need to be taking advantage of high probability trading. Once again, I'm only going over one of the 4 strategies that we are going to be teaching. And this is gaps, right? And I'm not even going over it in detail. And please do not just see a gap and when it enters again, take the trade, because there needs to be confluence with that company. And if you do it, just know that you're doing it on hopium. And don't come back to me. I don't want to hear about it. So let's just look again at the bar chart. And let's pick another company that was moving the market today. Did we do AMD? Oh my gosh. Lord Jesus, I can't even remember. Did we do AMD? Let me look at the AMD chart and I can tell you. I think we did. Yeah, I think we did. Um, but AMD was another one of my favorite gap. You see it right here. Just in case we didn't, let's just look right here. Gap formed, and there's a way to, it's really, when if you take the class, you'll know that how big this gap really is. It's not just this, but it is this, right? So let's go ahead and just show you another profit. Heck, if you would have done it Friday, if you would have gotten in to AMD on Friday when it entered the gap, this gap right here, if you would have gotten in on Friday, 197, you could have made an easy almost 15 to $20 per share. But let's go back here. If you would have gotten in on this gap at 140, let's say 150, and I think we did this one already, you could have wrote this to 180. No problem. Easy peasy. No problem. You would have gotten, let's see what happened at 170. Yeah, no, the reason why it would have been no problem because it blew past the resistance, the line of resistance. So anyway, so let's do one more. Let me see. Let me see. I want to see which company um is a little less expensive, right? Hold on one second. And I don't like using the word expensive, but let's go back to the stocks. And the beautiful thing is there's a section in bar chart. They're just so good. This is why I love I love this site. It lets you know the companies that have gapped up and gapped down, right? So what I like to do is a percent change. Who's moved the most, right? Then I quickly go through companies that are part of my watch list to see if there are any. And Google was on here earlier today. This is how I've yeah, Google was on here. They looks like their percentage has probably dropped. But and I do this first thing in the morning, which is so much well, I do it on Sundays and then I do it. Let's do Micron. Well, Micron's not really an inexpensive stock. So I'm trying to find one that is under $100 that I would be interested in, right? Because I know its pattern. Okay, we're not going to let's go to just the market, the movers today because uh here we go. No, here we go. I know I keep saying that. News and headline. No, no, no. Why do I'm not signed in, so give me a second, y'all. Just give me a second to get to the page that I want to get to. And it's slowing down, so that's what it is. Okay. So we're going to go to the stocks channel and we're going to there's other things that I am looking at while I'm talking to you, right? So that's what it is. The leaders. Here we go. Stock market leaders, right? So all of them tend to be over, except for Nvidia. Nvidia is $181. Trying to see if there was anything that okay, so let's just go to Nvidia. Because Nvidia I think I said this before, NVIDIA was the company that has made me, through trading, the most money since 2021. Um, and let's go ahead and look at their chart. So, for this purpose, I mentioned that you don't only have to buy the buyer's gap, you can also short stocks and make money. And we're going to show you how to do that. People don't know that you can also buy high and sell low when you short the stock. And there are, again, just like the buyer's gap, the seller's gap, and certain sellers' gaps, right? All gaps are not created equal, give you indication on when you can do that. So this is a seller's gap right here. Let's see if I can. There we go. Okay, hopefully that's clear for you, right? This is a seller's gap. And for people who know, they know. You can get in, and you could have got in, I would say no nowhere before here. You could have bought here. You would have, I don't know if, yeah, you probably wouldn't have got stopped out because it went to 142. So let's say you got here. This move would have went away from you. You know, you would have been losing a little bit money, but you would have been okay with it because you know what you know. And you've also done other confluence. And then NVIDIA is one of those pattern stocks that usually typically follow certain rules. Look, look, look how beautiful. So you would have sold it, right? I know it sounds weird. You would have sold it. Let's just go midway. You would have sold it at 137 and then bought it back at 113 and would have made that range, the 137 to 113, is the difference in profit that you would have made on that stock. And I can't go really into detail. I don't want this to be super long on how you short a stock, but we're going to show you exactly how you can short a stock and make money on the way down. And a lot of times it moves quicker on the way down, right? And so for somebody who waited for the gap to close, because there's a lot of people that I used to do that. I would wait for the gap to, if it didn't close completely, it would have to be like within a dollar range of closing. So if I would have waited, or you would have waited, because we don't chase stocks, if you would have waited to get in once it closed, you would have um, sold the stock, which means you're borrowing stocks. Oh my gosh. If you know, you know. If you don't know, we're going to teach it during the high probability trading course. And then you would have rode it until, well, definitely until the gap filled at 124, if you're not including the wicks. But there are certain indicators that you could tell you could have wrote it down. And then if you would have, got out with most of your position and left a few, because again, you're trading equities, you don't have to worry about time decay. You don't have to worry about your contract expiring. You're going to have the equity. It's not going anywhere, right? But you could have wrote it all the way. Oh my gosh. You could have went from 142 down to 107. Child, you would have made so much money. So much money on that position. And we're going to just do the calculations to show you how. We're not going to show you how to short. Please don't short unless you know what you're doing, because you're literally borrowing stocks from, you're not owning it, you're borrowing the stock. So anyway, let's go ahead and show the calculator. Oh, hey, CL Mont 04, good to see you. Welcome, welcome, welcome back. So let me go ahead and show you the calculator. And then we're going to go over how much that shorting opportunity could have yielded you, right? So I said you got in at like 140, let's say 142, and you got out at 117 to be conservative, but you definitely could have, yeah, 117. So 142 to 117, right? So what's that difference? Let's use the calculator. Where's my calculator? Here we go. 142 minus 117. So that's $25 per share. So that's just saying if you had 1,000 shares, no, excuse me, 100 shares. You would have made $2,500 off of, okay, of 14. Well, you would have had to put 14,000, right? So let's just 42 times 100, 14,200, but you still would have made over $2,000 off of that trade if you would have got out conservatively, right? And so again, I just want to show you, let's look at Nvidia chart one more time because I want to see a buyer's gap and show it to you. Um, Let me share the chart. Oh no, sorry. Trying to share the bar chart. Again, I just wanted to come on today because I was doing my own trading and I saw such good returns and results and setups that I was like, okay, for people who don't understand what I'm talking about, hopefully this visual will help you understand. So this is a beautiful one right here. This is NVIDIA, and I don't know what date this is, but child, oh, you could have made money several different ways from this gap to this gap, from this gap to this gap, and this entire gap. That's why I'm saying like every gap is not created equal. And so I really don't want anyone to take what I'm saying as, oh, anytime I see a gap, I'm going to get in at the bottom of that gap. And within 4 to 5, 6 days, I'm going to make me some money, because that is not what I'm saying at all. Give me 1 second. My computer is about to die. And let me just get the charger. So yeah, that's my disclaimer. I'm also making a disclaimer. This is what I do. I am not a financial planner. I am not a fiduciary. And so trade at your own risk. Any investment is risky. I always say that. Oh my gosh, I didn't even see all of this. Yeah, this was a 90% probability trade, I would say, if you would have waited, right, for the maximum opportunity. But like I said, you could have made money here to here, definitely once it got here, all the way up to here. And we're going to look at those numbers right now. And again, I'm only going over one of the 4 strategies that we're going to learn in the how the high probability trading only masterclass. There are 3 other strategies, and I'm not even showing you the best of this strategy. I'm just showing you what's obvious in this strategy. Like anyone who's looking at it can see, oh wow. Oh wow. Wow, 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 wow. Even from this gap here that was created that made this turn around. You could have made money on the way up. You could have made money again on the way down. Like this is, well, I won't say down all the way there, but to here. So let's look at the actual price at that time and how much you could have potentially made from this gap right here. So let's say you would have gotten in, you would have waited for this to close, even though there's another gap here that many people won't see, right? So some people would have waited for this to close, and it did. It did on this candle, and that's when they got in. But let's just say you was like, okay, I'm going to get in here because I know I may lose a couple dollars, but I should be within my stop loss. So I'm going to get in here. So you would have gotten in NVIDIA at, let's say, $96. Technically, let's see, what's the high here? I'm sorry, let me close this. $96. Let's just do that. So you would have gotten it at $96, and then you would have rolled this up and would have been able to get out the first time. I wouldn't have said this wouldn't have been my exit, but let's say you wanted to exit here. And why is this? Hold on, view actual size. There we go. Okay. Let's just say you got out, because the gap is really to here. You would have got out at 118. So again, you would have gotten in 95. You could have rolled this to 118 with no stress at all. But you could have rolled it higher, right? But let's just say 118. So from 95 to 118, let's just see how much you could have made there. And let's just I just want to show you again this. Oh, no, we're too far back now. Sorry. So again, let's just stick with this for now. We showed you the shorting opportunity. I'll show you the going long opportunity or the seller's opportunity and the buying opportunity. So 95 to, what did I say? Let's say 128. So let's look at the calculator real quick. So if you had $1,000, let's start there. Invested, divided by 95. You had 10.5 shares, right? You're getting out at 128. Remember, you started at 95. I mean, you started with $1,000, excuse me. You made $1,300. You made $347 on that trade. And hold on. Oh, I didn't show you let me show you the calculator. I'm sorry. Oh, goodness. Let me show you. I wasn't sharing the calculator so you could see. And we'll do that over so you can see. So this was what you ended up with, 1347.36. But let me do that again so you can see with your, own eyes. So I think I said you had $1,000, right? You the cost of the price of the stock was $98, right? That's what I said. 10.2 shares, I think. I think that's what I said. And then you got out at child. Let me just make sure I'm telling the truth. I said 128, even though I wouldn't have got out at 128. Is that what I said? I think that's what I said. But let's just do 128. Because you really could have wrote this. Oh my gosh, it shouldn't be 128, but I'm going to do 128 because I think that's what I said. So it went up all the way to 135. But okay, let's be conservative because there was a hiccup around 128. That's what it is. Okay. So let's do you got out at 128. 1306. I must have did a point something somewhere. But you would have made $1,300 in how many days? That would have taken a little. Oh no, it was 128. And I think I might have said something less than 95, but because it Yeah, 95. So that would have taken 1, 2, and let me show you this. Before I get off the calculator. So think about it. If you would have put 10,000 against this trade or into this trade, you would have made $10,306. Well, you would have made $3,006. And I'm going to show you just how long it took. And if there's no questions, that will be it for the day. But let me bring back the other the other chart. So you can see we can count the days together. Again, I wanted this to be visual. I wanted you to see exactly um, how how certain companies literally stick to certain patterns. Now, again, we're talking 70 to 80% probability on average. So there will be a few times, those, 3 to 2 times out of 10, that the trade may go against you, but we teach you how to protect. So think about it. If every time you deployed money, right, let's just say it's $1,000, and every time you got money back, let's just say it was $200. So 8 times 2 is 1,600, right? Those 2 times that it goes against you, let's just say you lost 200, you still walking away with $1,200. And if it's 3 times that it goes against you, you're walking away with $1,000 in profit. And again, we're using small numbers. We're using $1,000 investments. But think about if that's a 10,000. Think about if it's a 5,000. Think about if it's a 25,000, a 50,000. You get the picture. And I again do believe in long-term investing as your primary strategy for the future. You right to plan for your future. But active investing and trading to generate streams of income, an additional stream of income. And so let's count the days. So we got in here and I think we said 28, 128. We would have got out on this candle. What did this candle go to? I don't think this candle hit 128. So the next candle. So this first green candle before the red small candle. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. That's literally 2 weeks because you only trade 5 days out the week, right? Within 2 weeks, where are you making money like that without doing any work? Now it's active because you have to actually, get in and out of the trade. You have to open the trade, you have to close the trade. But as far as you getting your hands dirty, getting up early, all of those things, nah, you don't have to do that. And then, like I said, you could have turned right back around and made money on the way down. The following, let's see, when did this close? So this candle, the same candle or the candle you got out on, you could have got back in on to sell shares and make money. And you could have made money in 1, 2, 3, 4, 5, 6, 7, 8. Well, 7 because we're closing out around here at first. 7 days. 130 down to 121. So again, some of this may make sense to people who we about to wrap it up, Siobhan. Good to see you. But definitely, if you want to watch the replay, and anyone, I'd like to say this at the beginning, I forgot. When you watch the replay, watch it on 1.5 playback speed at minimum. If y'all about that life, watch it on 2.0. Get through it quicker. But again, I just really wanted to come in and share exactly how high probability trading strategies can be the help people need and the extra that people need, right? We shouldn't always have to just debit our accounts to pay for things. Let's credit them first. and then debit them, right? And this is just one of the strategies. But again, on this platform, on my channel, there's a whole host of ways that you can, you know, increase your income, credit your accounts. So it's not just being debited, especially in this day and age with the prices, the inflation. Once again, there is a live webinar if you want to learn more about the high probability trading course that starts on Sunday, of which there are only 3 seats left. There are 3 spaces left. But if you're interested, then go ahead and sign up for the webinar. The link is in the chat as well as the description, or sign up for the high probability trading course that starts on Sunday. You can do bit.ly. Oh, I also have a QR code, I think. Let me say, do I have a QR code? Sure do. So I'm just going to put this QR code up there. You can screenshot that, register, claim one of the last 3 seats. We are offering whoever, we're going to keep that bonus of the 100 stock watch list through today. You know, y'all be getting on my empath side, because I've gotten so many messages about, I didn't know there was a webinar. I missed the email. It went into spam. Guess what? That's what I'm coming live to. So go ahead, sign up for the webinar. The link is in the chat. The link is also in the description. Come if you're interested in learning more about the course that starts on Sunday. We're also going to give a peek. Well, I'm going to give a peek into the Decode Your Talent, Design Your 5+ Figure Income course replays, because not everybody wants to trade stock, but everybody wants to make extra money. So I'm just going to give a peek into that, but it's mostly going to be about the trading. We're going to talk about that course at the end. But again, this is my last time, listening to someone who says they didn't know. I have been coming live multiple days here. I have been sending emails to my email list. I understand sometimes things go into spam, but this again will be the last notification about this course. So again, I don't mind doing it. There's going to be a complimentary course tonight at 9 p.m. and one at 12 p.m. because that's the other thing. I keep hearing, oh, I'm on the West Coast. Oh, I'm on the East Coast. Oh, I work at night. Oh, so look how accommodating that your girl is being, right? So tonight at 9 p.m. Eastern Standard Time, we're going to go over the course again for people who are interested in learning more. You're interested, right? But you need to know more information. We're going to do it tomorrow again at 12 p.m. Eastern Standard Time. But we only have 3 spots left. So if you're super interested, like if I'm in the middle of the course and those spots go, then they go and I stop the course. I mean, the webinar, excuse me, because it's a small class. We can't train 100 people adequately. It's just, we just can't. And so it's just 2 of us. It's me and Andrea. And I also want to share with you, listen, it's time for y'all to start. This is one of my favorite pictures. Um, it's, at my parents' house, but it's not letting me share it. I don't know if you can see that, but that is me with a billionaire. 109, 110 billion, 110 billionaire, right? A billionaire multiple times over. I took this picture. It's at my parents' house, but it was me and Mike Bloomberg. And when I tell Okay. I am back, y'all. Sorry about that. That truly means it's time for me to get off. But what I was saying is that, um, and I don't know where I went out at, but I'll just end by saying I'm going to share another screen. The market is here for everyone. It's the one place. Oh, I left out a Bloomberg. Okay, did I finish saying what I was saying about Bloomberg? I'm not sure. But what I was saying is he really wants, now he's what, 83, 84, 85, somewhere around there now. But when I was able to pick his brain and him impart certain gems and words of wisdom and strategies, well, not necessarily strategies, but ways to think about the market, um, it was clear that he wanted more diversity. And it was one company that I almost went to work for because of how powerful his messaging to me was. But I didn't. I stayed with the company I was at, but it's one company that I would have, or I thought about jumping ship from, a company that was real cushy that I was enjoying, but because of the powerful conversations, I almost left. And he's a, like I said, Mike, let's see, how much is he worth today? Let me see how much Mike Bloomberg net worth 2025. $109.4 billion. $109.4 billion. And he's up about 5 billion since last year. So again, someone who doesn't position themselves around people who can teach you something you don't know are people that will forever be lost. Find you people who are going to have the conversations that um, you need, not the ones that are going to, keep you stuck. Listen, everybody, child, talking, all I see across my timeline, I don't know why, and I'm talking about social media. Candy's getting divorced, Portia in the airport. I'm like, they have hoodwinked and bamboozled us in a way that we will never understand. But as hard as they go to talk about the foolishness, I'm going to go as hard to talk about the stuff that we need to know about. And so I do have this chart up. I'm going to put the link to um TradingView for people because I do like this platform. I'm not signed. Am I signed? Yeah, I am signed into this one. Um, but I like bar chart. I also like TradingView. I trade on Thinkorswim, which is owned by Charles Schwab. Primarily, I also have E-Trade and Fidelity, but um, primarily I do Thinkorswim simply because of the charting setup. But some of these movements you can see much clearer here, right? So this is Google that we talked about earlier. Here's a gap that Google created, and it responded. It responded twice. It responded here the first time, and then when it, came back in, it dipped a little, but it really responded over the past few days. So you could have literally taken advantage of that response. Here's another one. This will be explained during the course. But once again, once it kind of filled, it went up, it ran up. If you would have stayed in too long, you would have had to weather some, I don't call them losses because you don't lose the money till you close the trade, but you would have went back up, right? Um, this is still waiting to be filled. So this would be something that we would chart out during the masterclass and give you a range of entry and exit points, along with the other strategies that will help you decide if this is the trade for you and when to take it. And then where you can ride it to. And this is going to be a nice little ride. This is going to be a nice little wave, just like, let me find. Sometimes fine. Do, 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 do. Just like I know I saw it earlier. Okay, is this it? Yeah. Just like this one. So this would have been a nice wave to ride. Once it entered, you would have had some down, and then you would have had some consolidation, but then it bam. And you knew it was gonna bam. But that would have taken a couple months. That's why we say swing trading could be a few days to a few months. And you have to be okay with that. And that's why you don't deploy money that you need to spend. You wait for the trades to happen because you're confident that they're going to happen as long as it doesn't hit your stop loss. And it wouldn't have hit your stop loss. Let's go back to the gap. So this is this the gap? Yeah, this is the gap. So that would have been 156. Yeah, it only went down about $5 or $6 before it turns around. So you would not have been stopped out of this trade and you would have known. Now, if it hits your stop loss, then you get out the trade. You were wrong on that trade. That's the 20 to 30% times that we talked about in high probability trading that the trade will go against you, but you know it's going to come back. And it came back good. So that's $181 that you could, let's just say 180. So if you would have got in at 156, if you would have got in at 156, yeah, if you would have got in at 156, you could have rolled that up $30 per share, 30 something per share, right? At minimum. And so, yeah, so that's pretty much all I got for today, y'all. I am going to um, get ready to, because it's lunchtime in the market, but I have some trades happening. I'm going to close out these trades and then get ready for this evening's masterclass or webinar. And then see y'all again, hopefully live tomorrow. Hopefully. Hopefully I'll put it in the chat. Y'all know sometimes this was just a impromptu because it was such a great day to talk about, because there are multiple gaps with the Magnificent Seven that happened and that we should be planning for. Anyway, talk to you later. Have a good night, everybody. Bye. If I don't see you, bye.